With the first month of the year now over, we look forward to what's going to happen at the start of February, all with Bob Mason of FX Empire. This is the week ahead. Hello, Bob, and thank you once again for joining us. Let's start with the figures for February. January is now almost finished. We're entering into the first week of the new month. Can we expect a busy week? How are the numbers looking?
It's a busy week ahead on the economic data front. It's a big week for the dollar, really. We've got ISM manufacturing and non-manufacturing numbers out in the first half of the week. We saw the market survey PMI numbers, but the market prefers the ISM numbers, so expect plenty of influence there. Service sector activity is going to need to be on the up, and manufacturing activity will need to be at least stable to support the positive outlook on growth. Factory orders midweek will also be in focus before we start shifting attention towards non-farm payroll numbers. We've got the ADP numbers due out on Wednesday. Not much influence from there unless they're particularly dire. The focus will be on the government numbers on Friday, with the wage growth and non-farm payroll numbers key to the US economy. Domestic consumption, retail sales, and consumer spending remain a key contributor to the US economy, so these numbers will need to stack up. For the pound, there's nothing to focus on. It's the first week out of the EU. Finalised PMI numbers are out. Barring any material deviation from prelims, we expect status quo on the data front. For the Eurozone, focus is really on Germany. We've got private sector PMIs, finalised numbers out, and then we've got from Germany industrial production, factory orders, and trade data out, which will have a material influence. We saw market sensitivity to business confidence figures last week, so expect more sensitivity to these numbers this week. So plenty to look out for the three main currencies, and then we can shift attention towards commodities in Asia.
A busy week ahead on the macroeconomics front with data due to be released shortly. But how's it looking on the commodities currency side? What can we expect from them?
It's a busy week for the commodity currencies. For the Aussie dollar, we've got manufacturing numbers out on Monday that will provide direction. Focus will then shift from a data front to retail sales and trade data due out in the second half of the week. The RBA continues to rely on consumer spending to support the economy, so expect retail sales figures to have a material influence. Any weak numbers, expect the Aussie dollar to sink. Main event of the week, however, is the RBA monetary policy decision on Tuesday. The RBA is going to be armed with its economic forecasts and projections for inflation. So based on those numbers and sentiment towards the impact of bushfires and the coronavirus, we could see a particularly dovish RBA who could open the door for a first quarter rate cut, which would really put the Aussie dollar back towards 66 levels against the US dollar. For the Kiwi dollar, it's fourth quarter employment figures in the second half of the week. Jury's out on whether the RBNZ is going to be able to stand pat on policy through the year. As we discussed, 28% of exports go to China. Disruption in China because of the coronavirus is expected to also affect the New Zealand economy. So any weak numbers would support a move, but perhaps not through the first quarter, supporting that divergence between the Aussie and Kiwi. Moving across to the loonie, we've got employment figures out in the second half of the week, and there's trade data as well. We saw employment figures provide support last month, so those numbers are going to need to stack up to at least weigh on any thoughts of the BOC cutting rates next month. Any weak numbers and expect pressure to build. Trade data will likely have less of an influence. So that's it for the commodities.
Again, we can't go without discussing the coronavirus that is spreading like wildfire across China and other parts of the world. But what detrimental effect will it have on the Asian markets and especially China?
Japanese yen, there's plenty of uncertainty ahead. The Bank of Japan has talked up economic outlook and inflation in the last BOJ meeting. The coronavirus outbreak and disruption to trade and within China itself is going to raise some question marks over what lies ahead. We saw the Bank of Japan make plenty of promises last year on providing further support. They never did. It kind of raises questions whether they have any ammunition left to support economy and drive inflation towards target. So big question is really not whether there's going to be disruption to trade terms and growth within the region. It's more about duration. How long will this virus breakout continue for? And if we see this continue through to the end of February and going into March, then obviously we're going to see a material impact and central banks are going to have to make a move. Bank of Japan, no choice really. The yen's under the hammer. Obviously, strong demand should the virus continue to spread and death tolls rise. So the last thing the Bank of Japan needs right now is a stronger yen, driven by risk aversion. Out of China, it's much more complicated. The virus has spread across the entire country. Major cities have been shut down. Travel has been stopped. So what impact does that have on the economy? Probably quite significant. Obviously, from a service sector perspective, the Chinese government had been pushing towards an increase in service sector activity to offset manufacturing. That's gonna struggle, and those numbers are going to be reflected in the first quarter. So all in all, it's looking a little bit dire for the Chinese economy, and obviously that's going to have knock-on effects from a risk perspective. Again, it's all about duration. So if this continues through to the end of the first quarter, then we're going to be struggling, and China will really struggle to recover through the second quarter any downturn that it experiences. So a bit doomy and gloomy for Asia right now. Central banks will probably need to step in at some point should all of this continue. Next week, we got manufacturing and service sector PMI numbers out of China that will likely be brushed aside. The markets are aware of what lies ahead. Perhaps another interesting question is what impact this will have on the Phase 1 trade agreement. Trump's hardly going to be pointing out China's inability or unwillingness to stick by the trade agreement. Obviously, China's unlikely to be ramping up agri-imports at this time. So how Trump handles that will be of particular interest.
And lastly, it's gone a little bit quiet on the geopolitical front lately with the impeachment trial of President Trump and the UK leaving the EU shortly. What can we expect on the geopolitical front, and will it have an effect on the market in the coming week?
There's been very little on the geopolitical risk front over the last week. Quite a marked change from the beginning of the year when we saw escalation in the Middle East, the threat of tariffs on the EU, and obviously the ongoing US-China trade war that has now resulted in the Phase 1 agreement. So barring any sort of hiccups and any sort of antagonization from the US president in the Oval Office, it should be status quo with the week ahead. Focus will remain on the coronavirus. The World Health Organization escalated the threat level to emergency, which does require the nations around the world to cooperate to mute the threat of a further spread. So it should be muted over the next week, though it's one thing to consider, in that it's Britain's first week out of the EU, but that shouldn't involve any material impact on the pound or the FTSE for that matter. There's a long way to go, 11 months for that matter, for Britain to start and wrap up trade negotiations and trade terms with many nations and trading partners. Even if the EU decides to drag its feet, obviously there's the likes of the US, China and more to meet and form agreements with.
Okay, well, that's it for today. Thank you once again, Bob, for joining us, and we will see you again next time.